Now friends, let me start with the discussion with respect to the TDS and TCS. Very simple provisions friends, but the TDS provisions is now already been implemented by the government, where there are specified transactions. I repeat, the specified transactions, then only these particular TCS provisions are applicable. First of all friends, let me take up this particular discussion with respect to TDS. Okay, so where there is any recipient of the goods or services, where it is government agencies, local authority, or any other notified persons. In other words, basically we call it as a government contracts. So if there are any government contracts which is exceeding a specified limit, in that particular case, it will be subjected to the TDS provisions, and you have to deduct the tax at source at the specified percentage. So if it is something like CGST, SGST, so make it 1% plus 1%, okay, because this is 1% as respect to the CGST. So if it is CGST, SGST, total it should be, otherwise if it is IGST, make it as 2%, okay. So this is the rate of TDS which has been applicable with respect to the government contracts. Friends, that way these particular provisions are pretty simple, and there is quite a good clarification in the recent past from the board, and the board has clarified that hardcore basic things, but the board has clarified that this particular limit of 2,50,000 rupees, this particular limit is for a contract, okay. So they have interpreted, and very rightly they have done that. A lot of clarifications they have already given on this particular front, in this particular case, that the limit with respect to the TDS which is applicable is with respect to the per contract. Further put it differently, this particular contract should be with respect to a taxable transaction. In other words, say for example, if there is a contract with respect to the exempted supply, that means say for example there is any contract with respect to nil rated supplies, in that particular case the TDS provisions should not be applicable. The second thing that the board has clarified, which is very importantly, and that is it is per contract limit. I repeat, ladies and gentlemen, that this is your per contract limit. In other words, for example, if you have two contracts, okay, one contract for 2 lakhs, another contract for 2 lakhs, so it is total is coming to 4 lakhs. So there may be a situation that the more than one contract with the same person is possible, but we have to consider the limit per contract. So each contract is, say for example, only rupees 2 lakhs, and there are multiple contracts with the same person, then also TDS provisions will not be applicable. I repeat, the limit which is provided here is with respect to per contract. Now there is a clarification, there are clarification, but I'll just brief you with that particular clarification very quickly, where the board has already clarified that if there is a contract, say for example 3 lakh rupees, okay, in that particular case the TDS provisions will be applicable. A very simple example. However, if this particular contract is for exempted services, then variety of examples they have given. So this is one example they have given, where there was a contract and that particular contract could be for the exempted services, then there will be no TDS which is required. However, this example, there is one extra point that also I will tell you. So these are variety of examples that they have already given, where the board has already taken the view, and it is very correctly that if it is with respect to the exempted supply, then there is no TDS provisions ever applicable in this particular situation. Now further, the board has also clarified the limit which is your 2.5 lakh rupees, say for example, this particular limit is all exclusive of taxes. I repeat, in other words, there could be a complication that supposing two party, that means two person in the market, they may saying that the contract value is supposing 2,60,000 rupees, say for example. So you will feel that, oh, the 2,60,000 rupees is more than 2,50,000 rupees, so TDS provisions will be applicable. But it is possible that 2,60,000 rupees, the value of the contract is maybe inclusive value of the tax. That means 2,60,000 is including taxes. So this is what one example that they have already given, that if the value is 2.6 lakh rupees, supposing that is including your GST figure, so you have to convert it to the exclusive figure, and that exclusive figure, if it is greater than the limit, then okay, the TDS will apply, otherwise TDS will not apply. So they have clarified that the value for all these calculation purposes should always be considered as exclusive value. That means excluding the value of the GST, CGST, SGST, IGST as the case may be. So excluding those taxes, that means our GST taxes, excluding should be the value which should be considered for the purpose of deduction of tax at source. Okay. So two of the most important thing, One, that if it is exempted supply, no TDS. Second, the value which should be considered should always be exclusive of taxes. The third thing, friends, which I want to bring it to your notice here is, people are maybe likely to confuse a little bit, but there is a special provisions under section 51 which says that provided that no deduction shall be made, provided that the no deduction, that means TDS provision, should not be applicable where the location of the supplier and the place of supply, location of the supplier and the place of supply is in the state or union territory which is different from the state, as the case may be, which is registration of the recipient. Okay. In other words, there is a special mechanism which has been provided where the location of the supplier and the place of supply, that means logically either of the place of the supplier, logically that means the location of the supplier or the place of supply. Okay, so these two is to be compared, okay, with the registration of the recipient. Okay, if it is different, okay, in that particular situation, no TDS provision should be applicable. Okay, now this particular point has been analyzed in detail by the board and they have already given a very good analysis on that particular front. Look at this particular point where no deduction shall be made. No deduction shall be made. Okay, location of the supplier and the place of supply okay, is different from the state of registration of the recipient. Okay, now look at the example that they have already given and very correctly let me analyze that particular point, because here the students are likely to do mistakes. Okay, now see here, they have given an example, location of the supplier and the place of supply, location of the supplier and the place of the supply. This is what they have already given. Okay, and this is the place of the recipient, that means registered place of the recipient. Is that okay? Now in this particular situation there are different ways of understanding. I mean different ways, that means if either of this particular place, that means location of the supplier or the place of supply, either of these is same as the place of the recipient, in that particular case you may say that the TDS provision will be applicable. Okay, whichever way that you understand. And if these particular places are different, in that particular case the TDS provisions not applicable. Okay, now let us analyze this particular point very, very carefully. The location and the place of supplier. So this is your Kolkata. This is also your Kolkata. So location of the supplier is Kolkata. Place of supply is also Kolkata. Okay. And the state of recipient registration is also West Bengal. Okay. So this and this place are different. If they were to different, then no TDS was required, but it is one and the same. Okay, so this place and this place is the same, so they are not different, so the TDS provision should be applicable. In other words, friends, what is required is that there should be some common place between the supplier and the recipient of that particular supply of services or goods, as the case may be. In this particular situation, since the place is the same, TDS provisions applicable. Okay, now see here, this is Delhi, this is Punjab, and here it is Punjab. Okay, so one of the places is the same, these two places the same. Okay, that is Punjab and Punjab. So in that particular case, TDS provisions will be applicable. Okay, so one of the place, if it is common, that means either the location of the supplier or the place of the supply, match it with the recipient state. If either of one place is common, that means it is the same place, then this particular provisions of the TDS will be applicable. Look at the third example. Okay, Delhi and the West Bengal. There is nothing in common. That means it is completely a different place. Okay, so in this particular case, the TDS provisions shall not be applicable. Okay, in other words, there is basically the matching of the places. If the place match, that means the place of the supplier and the place of the recipient, if that particular place match, then particular TDS provisions will be applicable. Otherwise, the TDS provisions will not be applicable. And depending upon the situation, whether it is CGST, SGST or IGST as the case may be, so accordingly you have to consider for the purpose of TDS. So depending upon the place, it is intra-space, interstate, etc., that you have to decide accordingly, and accordingly you have to deduct the tax at source. Now friends, let me give you one example with respect to the TDS. In fact, it's a very simple calculation, but no big deal. But let me just do that. Okay. Now section 51, where TDS rate as specified is 1% plus 1%. But as I've always told you that this is all this percentage of TDS receives are exclusive of taxes. This is how generally it is to be understood. But supposing if your bill amount was 1 lakh rupees, this also CGST, SGST, this is your total bill amount. Now supposing on this particular one, if you have to calculate the TDS figures, so you will calculate only on 1 lakh rupees. So if the tax is to be deducted, it will be 1 lakh rupees multiplied by 1% as the case may be. Okay. So it depends on whether it is CGST, SGST as the case may be. But whatever the TDS provisions are to be applied, is always on the value which is exclusive of the taxes, and this is how it has to be understood. In other words, if this particular payment has to be effected, that means if this particular transaction has to be effected, the TDS will be 1% plus 1% on 1 lakh rupees, and accordingly the tax deduction has to be effected in this particular situation. So if I have to pay this particular bill, I'll be deducting rupees 2000 on account of TDS. Now friends, in relation to the supplies made with respect to the eco-operator, that means anybody making supply through the eco-operator, there is a TCS provisions, the tax collection at source. So eco-operator, when he is going to settle the amount with you, he has to collect the tax, and that particular tax on account of TCS, you will get a credit on that particular, just like a TDS, but it works on a TCS mechanism. So here friends, the basic point to be noted is any person who is paying the money in the status being an eco-operator, not being an agent, and the payment is collected by the eco-operator. So here the payment is collected by the, that means the supplies which is made by the eco-operator. So here the example can be like Amazon. So if I am selling my product through the Amazon or through a Flipkart, then this particular situation will come into picture. Who is the pay? The pay is any supplier making supply through the eco-operator. Now logically friends, that every person who is making the supply through the eco-operator is in the compulsory registration category. So logically you can say that such person will be a registered person, but that's only the logical conclusion. The TCS rate has already been provided is 0.5%. That means it is CGST 0.5%, SGST 0.5%. In case if the IGST comes into picture, it will be 1%. So these are the rate of the TCS which has been provided. Here under the TCS friends, there is no basic limit. There is no basic threshold limit which has been provided. So here whatever is the value of the taxable supply, the net value of the taxable supply, that is your net supplied minus the return, in case if there is any returns, on that the taxes to be collected. In other words, here there is nothing like basic limit. That means if the transaction value is only more than the limit, then only TCS provisions will be applicable. It is nothing like that. Further friends, if there are any supply services which is referred to under section 9.5, that is basically those notified services like that radio taxi and all those kind of things which I have explained to you before. Those section 9.5, that is not covered by TCS provisions. Keep this particular point in your back memory very importantly. The reason being that those services which are covered by section 9.5, those services, the eco-operator is chargeable to pay tax as if you are the supplier. Since as if you are the supplier which is covered by section 9.5, so there is no question of you collecting tax on your own services. And in other words, there is a special dimming fiction which is created by the law under section 9.5, and therefore the cases which are covered by section 9.5 are to be excluded. That means they are not subjected to TCS obligations whatsoever, because those operators, those eco-operators are already in the dimming fiction that you have to pay the GST as if you are the supplier. Okay, so here if you want to convert that, what is the amount on which that particular tax is to be collected, I'll give you one example. Let's say for example, this particular company is supplying 55 lakhs through the eco-operator, and some of the goods have been returned and the value is 5 lakhs has been returned. So what is the net value? So this is what you have to find out. Okay, so the net value of the supplies, and that is what is already provided by the law. Net value, what is already supplied. Okay, that is whatever is supplied minus the returns, if any, because in these online transactions the returns etc is also very prominent. So this is your net supplies. Okay, now all these friends calculation should always be done keeping in mind exclusive of taxes. That means all these numbers that I'm using, for example 55 lakhs, 5 lakhs and all that, should be exclusive of taxes. So wherever these breakups are already available, it should be excluding taxes. That means there should not be a TCS on the tax amount by itself. So that is one of the fundamental thing that you should not forget. So your net supplies is how much is 50 lakhs. Okay, then TCS will be at the rate of 1%. So 50 lakhs of that 1%, that is 50,000. So that much amount will be collected. That means logically that much amount will not be paid by the eco-operator. So if eco-operator now has to pay this particular money to this particular company, so how much it will pay? It will pay 49 lakh 50,000, because 50 lakh rupees has been supplied by the supplier through the eco-operator minus the TCS, because that much amount has to be withheld, and net balance will be settled with the respective person. Now friends, here if you want to convert it into a formula, like for example, what is the net value of taxable supply? So this is a logical conclusion of this particular formula. That is the aggregate value of the taxable supplies of goods, services as the case may be, minus section 9.5. That means this is a logical conclusion, because section 9.5 supply through the eco-operator, those type of eco-operators which are notified under section 9.5, they are not covered by this particular provisions, and minus whatever are the returns of taxable supplies of goods. In other words, whatever is the supplied minus the return, whatever is supplied minus the return, okay, that particular will be subjected to your net calculation. That means it is net supply minus the return and minus section 9.5. This is the formula. I mean, many people have developed like that. So on that you have to apply the provisions of the TCS. Friends, with respect to the accounts and the records, now it's a very simple provisions where it says that you have to maintain the specified records. Absolutely no big deal, very simple and straightforward provision. Only 1 or 2 points which I would like to bring it to your notice here. Okay, so accounts and records are to be maintained. These are all the specified accounts records with respect to production, manufacture, inward, outward supply, stock of goods, etc. So these are all the specified things which you will have to maintain it. How much time that you will have to maintain this, all these particular records as the case may be, it is already provided in this particular provisions as 72 months. Okay, so this is a logical period, logical upper period for which you will have to maintain all these particular records under this particular GST provisions. Further, where are you supposed to maintain these particular records? These particular records are to be maintained at your registered place, and that's a very natural thing, that you will have to maintain all these particular records, and these particular records can also be in the electronic form, and it has to be kept at a particular place, and which is the place where you are already registered in the electronic form, in such form as may be required. One of the valuable point which I just want to bring it to your notice is that these particular records, that means accounts, records, details and all that kind of things, whether you are owner, operator of the warehouse, or operator of a godown, or the place used for the purpose of storage. Now these people, every person who is the owner, operator of warehouse or a godown or a place which is used for the purpose of storage of goods, okay, or every transporter also, okay, irrespective of whether he is registered person or not a registered person. I repeat, irrespective of whether you are a registered person or you are not a registered person, shall maintain the records of the consignor, consignee and the other relevant details as may be prescribed. In other words, for example, your goods are being stored in a warehouse and you are a owner of a warehouse, and you are basically, see, actual goods are in your custody logically. Of course, it is but for on behalf of someone else, but actual goods are under your roof and you are a warehouse operator. So the law says that whether you are registered or not registered, but actually the goods are under your roof. That means basically the goods are underneath your control. Basically, for the time being, you have to maintain all the necessary records with respect to the consignor, consignee, that means who is the owner, from where the goods have come logically, and where the goods are going, and all other relevant details. In other words, whether you are registered, not registered, you have to maintain this particular records. That is one of the very, very valuable thing. Okay. The another valuable thing is where your turnover is exceeding a particular limit, then you have to go for an audit, and this particular audit is to be done by a chartered accountant or a cost accountant. I repeat, under the GST, the chartered accountant can also do an audit, or even a cost accountant can also do a audit. In other words, the status, the the audit status under the GST regime is at par for the chartered accountant and the cost accountant. That means the degree qualification of both the professionals are at par from the GST point of view, and in the GST the audit can be conducted either by CA or by CS, as the case may be. Further, friends, these particular accounts and records, there is one of the small little valuable point with respect to the e-way bill. See, whenever the goods are into the transportation, and this is this particular concept of the electronic e-way bill is oftenly endorsed by the developed countries, where the goods are into the movement, so they want the tracking of the goods. E-way bill, the whole purpose is the tracking of the goods. Okay, so maybe your goods are going from the factory for the delivery to some other place, or maybe for different reason it has been transported. Basically, the GST authorities wants to know that which goods are going from one place to the another place, and the solution to that is the e-way bill. It is basically a transporter's bill. In other words, this particular e-way bill has to be generated electronically, and e-way bill should have all the particular details like consignor, consignee, where these particular goods are going, and all that kind of things. That means every transportation of the goods should be covered under a document cover, and that document cover is called as a e-way bill. This e-way bill is to be generated online through the GST portal. That means it will be in the electronic format. So just imagine the GST authorities, friends. The GST authorities will be sitting in one particular office, and they will be knowing that on which state or from which area majority of the transport of the goods are going from one place to the another place. Okay, so they will know that particular movement of the goods, and so that if they want to track it, they can track it also. Not only this, friends, some of the advanced countries have also real-time GPS tracking concepts. In other words, some very high value goods or something like that, which is of course subjected to GST, and government is very sensitive to that. They may also say that that particular transporter might need a GPS tracking device, the specified devices. However, we have also, as Indians, we have thought about it, but the actual implementation is a little bit time to go on that particular front. But the law has already made all these provisions in this particular front. Now, the e-way bill, basically the transporter's bill, okay, before the movement of the goods has to be generated by the registered person or a transporter. In other words, friends, the e-way bill generation could be done by either of the person. However, as far as possible, it is better that the registered person should do that. But if in any situation, if he is not able to do or not done it for any reason, the transporter has to generate e-way bill. In other words, if without a e-way bill, there can be a lot of other complications for the transport of the goods. For example, if GST authorities try to check your vehicle when it is already on the road and when it is moving the goods, and if you don't have a e-way bill, that can create a lot of problem, because the appropriate documentary thing is already not there. If the value of that particular goods is more than the specified limit, then only the e-way bill is required to be generated. Okay, it is to be generated for any modes of transport. The description, the basic description, like your goods, consignor, consignee, etc., has to be there into that particular natural things. If there is any change in conveyance, then you have to update the details. Now, for example, your goods are going in one truck, something got wrong with that particular truck, and now you are changing that particular conveyance. So it has to update the data. So that updation of the data in the GST portal has to be carried out on this particular front. And if there is one conveyance which is carrying more than one shipment, for each of the shipment there has to be e-way bill. That's a very natural thing. So, for example, there is one truck, one goods carriage vehicle is carrying, supposing 5 consignments. So, for each of the consignment there has to be the appropriate document. In other words, it has to be evidence. See, the whole purpose here is it has to be evidence that your entire consignment, the entire truck, which you are saying that one truck of goods is already going from one place to the another place. So all the necessary consignments which is inside that particular truck should have appropriate e-way bills, and that documentary thing has to be generated online. Validity of the e-way bill, that if traveling for 100 kilometers, it will be valid for 1 day. For additional 100 kilometers, it will be valid for additional 1 day. In other words, every e-way bill which is generated, basically as I told you, it's a transporter's bill. So you are going to transport it. And naturally that 100 kilometer transport will easily be completed in 1 day of time. So that's the reason it says that there is a kilometer limit, and to that extent there is a day's limit. However, it can be extended in case if there is any additional 100 kilometers. Okay. Now, receiver of the goods at the end of this particular consignment, supposing I am transporting the goods. Now my goods are already transported. So the person who actually received that particular goods must accept on the portal that okay, I have already received that particular good. So basically it's a confirmation, electronic confirmation that you have already done it. And in case if that particular person does not do that, then the law says that it is as good as deemed to have been accepted. So that kind of provisions have already been effected in this particular front. However, there is no need to have any e-way bill if it is within a state, a small little transportation. That means if it is just the movement of goods very short distance, for that the e-way bill is not required under this particular provisions. However, there are certain situations which is also provided by the law that for those e-way bills are not required. Many bulk transactions, like for example post office and all that kind of situations, some very logical things where the e-way bill is not required to be generated. So for that certain relaxations have been provided that for those typical type transactions you are not supposed to generate any e-way bills. Provisions relating to the refund. Friends, I've already explained to you many times, even in my regular class, even in the customs, that there is some concept of called as unjust enrichment. See, under the indirect tax laws, the duty burden always gets passed on to the next shoulder. In other words, in the economy, when the goods are being sold by one person to the another person to the third person to the fourth person, each time the duty burden, the tax burden gets passed on to the next person, and the ultimate consumer of that particular goods actually bear that particular tax burden. So if logically if there is any refund ever is to be given, logically it should be given always to the end consumer, if it is to be given, who is the actual consumer of that particular goods, but practically it may not be possible. In other words, just imagine a broad economic situation under the GST, broad economic situation. Okay, say for example, Mr. A, the manufacturer, sold it to B, sold it to C, sold it to E, and sold it to E. Okay, E is the ultimate consumer of that particular. Okay, now he has, say for example, charged 100 plus GST. Now it is sold to him. So each time when the goods are sold, the tax burden gets passed on to the next shoulder. Okay, and ultimately Mr. E, who is the ultimate consumer, who is actually bearing the actual payer of the taxes, is Mr. E only. So logically, if there is any refund, it should be given to Mr. E, but it may not be possible. The reason being that if I am a consumer, just imagine if I am the consumer and if I want to make the claim of the refund, then I will have to prove it that okay, these are the same goods which I have already consumed it, which come from Mr. D. Then I should have the documentary trail back to Mr. C that okay, that Mr. D bought it from C. These are the same goods which I have used it. Then again Mr. C to Mr. B, I should have a backward documentary trail, and this is practically impossible. And that is the reason every indirect tax law always has a concept of something as a unjust enrichment, where the law says that by default, if there is any refund, the refund should be given to consumer welfare fund, basically the specified fund. So by default, that means the GST department cannot keep that particular money because it is not by the authority of the law. So if at all any refund is to be given, the standard language of the law is that it has to be given to the consumer welfare fund. Okay. However, if there is any specific situation, that means if Mr. E can prove it, in my example, then no, I am the only person who is entitled to that particular refund, and I can prove that these are the same goods moved from A to B to C to D to E, and I am the consumer, I have all the documentary things, all our official transactions, and if I can prove it, I may be eligible. I'm saying I may be eligible for the purpose of the refund. In other words, this concept of the law has been accepted by the law, saying that by default the refund is to be given only to the welfare fund. However, in a specific situations, I repeat, in a specific situations, it can be given to the respective person. Okay. In other words, some of the situations are already thought of by the law. For example, export incentive. So export incentive, if you have done some export, you may get the refund back, is a possibility. So those are kind of specific situations. If it is those specific situations, only then the refund is to be available. Otherwise, the refund is not available. Second thing, friend, you should always remember the refund never comes automatic under the indirect tax law. I repeat, refund never comes automatic under the indirect tax law. A refund is a procedure where the taxpayer has to make a claim to the government that, okay, I am entitled to this particular money. I do that particular documentation and you process that particular refund claim, and then the department has to get back to me saying that we pass the order, you get the refund or you don't get the refund depending on the situation. In other words, refund is not an automatic process. The refund is a subject matter of procedure, and if the procedure is correctly done within the time and with the appropriate documents, with the appropriate claims, only then the refund is to be available. So every person has to apply within a specified time, and the order has to be passed. Order has to be passed by the appropriate authorities to grant the refund or maybe to not grant the refund, depending on the situation. In other words, it is a procedure. The unjust enrichment, which I just told you, is a fundamental concept always accepted by the law under the indirect taxes, that normally the refund is never to be given. That means by default, the refund is to be given to the consumer welfare front, except if you can prove that, okay, you are entitled to it. Okay. Now, these are all the specific situations which are thought of by the law. Okay, so there is a list of specific situation in detail that I have already discussed. In all the situations, friend, the concept is the same. The person who makes the claim of the refund should establish that you are the person who actually bear the duty burden. Only then you are entitled to the refund claim. Otherwise, you are not entitled to make any refund claim whatsoever. One of the points which I already explained to you previously, but I just bring it to your notice here, this point number C. Okay, now say for example that I have got the advance money. Okay, when I have advance money, I might have issued a receipt voucher. So maybe I am subjected to the GST, and upon the receipt of the advance money, I have already paid the GST. In certain situations, that is also possible. But subsequently, the advance money had to be refunded because the transaction did not materialize. That means supply could not happen. So if there is a refund of the advance money and I have already paid the GST at that point in time, I get a refund back. So this is one of the situation. The refund of the tax paid, or basically the refund of the money to the person who has already given you that particular deposit, and you issue the refund voucher against the receipt voucher, naturally. So receipt means when you have received the money, against that you are refunding the money. So that transaction which actually not materialized, but you already had a GST burden, so that is kind of a refund, because naturally you bear that particular refund. That will be possible in this particular situation. There are quite a good court cases, but not on the GST regime, but in the other indirect tax law, in the older system. It is also there in some of the customs law court cases, which I just want to bring it to your notice. Now, say for example that you have got a transaction that you have a purchase and you have already sold that particular goods. Okay. Now, there is another person who has already purchased that particular goods. Now, moment you say that you have sold that particular goods, keep this in mind, it is as good as the duty already recovered, or duty or tax which is already recovered. In other words, sometimes it may so happen that you are selling some goods. Okay, so when you are selling, maybe you have not issued proper invoice, or maybe you have not shown that particular breakup, that exactly what is the tax that you have already recovered or not recovered, or something like that. There may be some glitches in relation to the sale transaction, but the courts have explained from the refund point of view that if there is any purchase of goods or any manufacture of the goods, etc., if those goods are as good as sold, the sale price means logically you are already recovering amount of the taxes. That means the goods which are sold by someone, already sold by someone, in any situation you will not be entitled to a refund. In other words, to this kind of logically we cannot give any refund, because the sale price of the goods logically includes the recovery of the taxes. Okay, so the ultimate refund, if any, logically in general is to be applied only to such situation who has already purchased the goods and logically he has not sold it. That is either of the situation, or he has purchased it and he has consumed it for himself. Only such situation may be entitled. Again, there are a lot of ifs and buts, but may be entitled to the refund. Is a standard fundamental concept which is adopted by the law, and most of the specific situation follows behind this particular concept of the refund in general under these particular provisions. Now, friends, the provisions relating to the job work and the input service distributor. But right now, first of all, I will focus on job work, and then I will talk about the input service distributor. Friends, the job work provisions are very simple, very conceptual, and very practical in the real life situation. See, for example, if I am a person. That means I am, say for example, manufacturer, or if I am a person who is doing little bit of value addition to the my input material, but I'm getting that particular value addition done through a job work. Basically, I send my goods to a job worker that do some little bit of processing and all that, and do some value addition, and thereafter you send the goods back to me. So any such transportation movement of goods by the principal to the job worker is always permitted. However, it may also be a situation with respect to a third party model. For example, if I purchase the goods from you, okay, and you sell your goods to me, but I tell you that look, you please don't deliver the goods to me, because I will have to again give it to my job worker, because goods are basically to be processed by the job worker, some value additions is to be done there, and thereafter I'm going to sell that particular goods. So what you do is you transport the goods not to me, but you transport the goods to my job worker, but I will pay you the money because I'm the purchaser. Such transactions are also accepted validly by the law. We normally call it a bill to ship model. This kind of a model is also accepted by the GST in relation to the job worker. So the goods can be sent. So normal situation is like I will direct my particular supplier, that I will tell him that you please deliver the goods to that particular address, which is my job worker's address, but you send invoice to me because I'm going to pay you the money. Okay, that means I am the real purchaser, but for me you send the goods to someone else. This transaction is accepted. Thereafter job worker will process the goods, and when the job worker will process the goods, thereafter he will send me the goods back, and thereafter I will sell it. So it's a very simple, straightforward transaction. Let us understand the hardcore basic transaction first of all. Okay, so say for example, in the given case, there is a supplier, D is the seller supplier, third person is, say for example, Mr. B. Logically I call him as the buyer. Okay, so he is the actual buyer of that particular goods, but this particular person tell him, the seller, that see, you don't transport goods to my place because I have anywhere to give it to my job worker. So you transport the goods to my job worker, who is, say for example, Mr. J. This transaction is accepted by the law. In other words, the law says that the transportation of the goods under the cover of the direction of this particular Mr. B, in my example, the real buyer, is permitted by the law. However, it has to be supported by the appropriate document. That means there should be appropriate e-way bill, there should be appropriate invoices, documentary things. All those things should be into the order. In other words, in this particular situation, ultimately the real buyer, the real purchaser, as I understand, is Mr. B. So real input tax credit will be available to Mr. B only, because the real purchaser is Mr. B. The place of supply in this particular situation will also be regarded as that of Mr. B, because he is the real buyer. So in other words, it is a real transaction between seller and the buyer. Job worker is only a person who is actually just taking the delivery of that particular goods for the purpose of processing. Okay, now in the given case, the law is pretty simple with respect to job worker. The job worker ideally should be the registered person. Okay, so in certain situations, job worker registration exemptions have also been given, but let us take a plain vanilla example first of all, that job worker ideally should be registered. If the job worker is not registered, for example, then this particular principal person has to declare, that this is the place of the job worker where his goods are lying. That means he has to declare his place of business as the address of this particular person also. Basically, see, government wants a proper what should I say, disclosure with respect to the goods, that where are those goods and who are the real owner of that particular goods. So depending upon the job worker who is already registered, or if the job worker is not registered, his place where the goods are actually going to get processed has to be declared by that particular buyer, who is the real buyer, because real owner of the goods is Mr. B in my example. So has to declare those particular things in this particular situation. Now this Mr. Job worker will finish his job work. Okay, after the job worker is going to finish his particular work on that particular goods, he has to return the goods. Now there are two situations. He will return the goods either back to the buyer. So Mr. Buyer will say that, okay, now your work is already over. Okay, you send the goods to me and to my address. Then the goods will move. So again, the job worker will move the goods. Again, this movement of the goods is also permitted. He will move the goods upon the direction of the buyer, that, okay, my job work is already over, your value addition is already done, and I send the goods to this particular place. Okay, or it can be given to someone else. Say for example, Mr. C. Okay, but under the direction of Mr. B. That means, say for example, now Mr. B is outright selling the goods to Mr. C. That okay, my goods are already proper finished goods has already happened. Now Mr. B is another buyer who is buying it from Mr. B. So Mr. B has to sold it to Mr. C. So what Mr. B will do? Mr. B will direct the job worker that okay, your work is over, deliver these goods to Mr. C. Okay, in that case, the job worker will transfer the goods. That means transport the goods under a document cover, appropriate challan document, etc. has to be there at each of the place, and it will go to Mr. C, and then Mr. B will close this particular transaction, and thereafter the goods will be with that particular Mr. C. Even this movement of goods is permitted. In other words, all the transactions, in other words, for the job worker, job worker can receive the goods. This is how you should understand. And the job worker can again transfer that particular goods, but it has to be under the direction, under the document cover of Mr. B, because the real owner in our example is Mr. B. So job worker's role is very, very, very simple. In this particular case, job worker will not get any input tax credit. In other words, it is not a purchase sale transaction of a job worker. The job worker is neither purchasing the goods, the job worker is neither selling the goods. That means job worker is only providing his services. So neither he will get any input tax credit for the purchase, nor he will be chargeable to any tax in relation to if he transfers this particular good to another person under the direction of Mr. B. Okay, so for him there is no purchase sale transaction. However, a job worker, there is something called as a job work charges. In other words, this job work charges is basically like a labor charges. The labor charges that the job worker is going to take for the work that he is doing, that will of course be taxable. So that transaction is a separate transaction, and the movement of the goods under the cover of Mr. B is a different document. It is a different transaction altogether, and it is to be considered. Now the law says, because these particular things are so friendly with respect to the job worker, now the law says that there is certain limitations here. Certain limitations in the sense that the job worker has received the goods, and thereafter he is going to transfer the goods. Okay, but it is not for his purchase and sale. So job worker, when he is receiving the goods and he is transferring the goods, it has to be done within a specified time limit. Listen very carefully. It is to be done within a specified time limit. The law has provided for a reasonable time limit. Okay. Now, let us assume a worst case scenario that the job worker is violating that. That means job worker has received the goods. But then he is not transferring the goods either to Mr. B or to someone else in the under the direction of Mr. B. Okay. So he is violating this particular time limit. So in that particular case, there is a deeming fiction. In that case, it is said that it shall be deemed that the Mr. B has supplied, that particular goods to the job worker. So job worker now will be as good as becoming a purchaser, of that particular goods, and thereafter if he transfers it, he will become as good as like a seller of that particular goods. In other words, there is a deemed supply. If the job work goods are not returned back within a specified time. That is a clear, very good deeming fiction which has been provided by the law. However, I go back. Okay, so if supposing transaction is a very, very straightforward, everything has happened within the time limit. In that particular case, it is all the transactions of the purchase and sale of Mr. B, and accordingly Mr. B will take the input tax credit and he will be chargeable to the taxes, if any, upon the supply of that particular goods. Okay. Now, what is the time limit? Okay. The time limit is if it is a goods, then it has to be returned within a period of 1 year. If it is a goods, it has to be returned within a period of 1 year. If it is a capital goods, then it has to be returned within a period of 3 years. So if it is a goods, it is 1 year return time, returned by the job worker. If it is a capital goods, it is a return time of 3 years. Okay, it has been provided. However, in relation to something like jigs, molds, dies, etc., in that particular situation, there is no return which is required. So let us understand that particular time limit. Very simple, but I once again repeat that the principle, that means in my example, Mr. B will be entitled to all the input tax credit and all that kind of situation. Very simple, straightforward kind of, and basically the movement of goods under a document of a job work can be effected. There is nothing wrong in doing that. Okay. Now, the inputs which are sent for the job work is not received back. So normally it should be received back. And if it is received back within a specified time, there is no problem. But if it is not received back, then there is a problem. Okay. In that particular case, first of all, understand the time limit. If it is not received back within a period of 1 year of being sent out, and this particular 1 year shall be calculated as, from the date of the receipt of inputs by the job worker. So sometimes this particular date can really, because that transportation time also has to be considered. So for example, if Mr. B has directed the supplier that to transport the goods, so there may be, say for example, 2 days of transportation of time. So this 1 year time is to be calculated. That is a 1 year 1 year time limit which is provided here. That 1 year time limit is from the receipt of inputs by the job worker. 1 year time limit is provided. Similarly, if it is a capital goods, the time limit is 3 years, and if you violate that, it shall be deemed to have been supplied. Okay. Now, that particular point also I want to bring it to your notice with respect to this. Okay. Within 1 year, it shall be returned back. But if it is not returned back, okay, in that case, it shall be deemed that, this is the very valuable, it shall be deemed that such inputs are supplied by the principal to the job worker. It shall be deemed that it is supplied by the principal to the job worker. That means it will create a tax liability. Remember one thing very carefully. On the day, this is also a very important point, on the day when the said inputs were sent out. So logically, you understand that the 1 year time has already passed. Okay, so there is a time gap of 1 year. Okay, it was goods were sent on a particular date. 1 year has already passed, but still the goods have not been returned. So it is said that it is deemed that it will be regarded as a supply, but on which date? It will be a supply on the date when it was sent out. In other words, it will be regarded as a supply logically of a historical date, logically more than 1 year, because up to 1 year there will be no such consequence. So it will be as good as a supply of that 1 year back. In other words, you will not only have to pay the GST, plus you will have to pay the interest on that particular sum, because this is like a deemed supply of that law does not say retrospective, but logically it is like that. It is like a retrospective effect, and accordingly you will have GST burden, plus you will also have an interest burden on that particular front. Further, if there is any capital goods, which were sent for that particular job worker, okay, it has to be returned back within a period of 3 years being sent out. Same to same language, but only thing it is with respect to the capital goods. So now I'm not going to the details of this particular point, because it is the same way how the 1 year is calculated, the same way the 3 years have been calculated. However, the important point with respect to this capital goods is that these provisions shall not apply. That means nothing contained in this particular provision shall apply to molds, dies, jigs, fixtures, tools which are sent out for the job worker. In other words, if there is any such things which are sent out for the job work, that means, for example, certain dies, etc. For that, there is no condition for the return. That means, if a job worker is doing some work based on some molds or dies which is supplied by, say, for example, myself, who is basically the real buyer, in that particular situation, those things, basically, they are like consumables. These consumables need not be returned in this particular situation. Further, if there is any scrap and all that, that also need not be returned. 1 second, let me just clarify that particular point also for you. Okay. Now, in case where there is any scrap or something like that, look at this. Where this particular provision, where there is any waste, scrap which is generated during the job work, okay, it may be supplied by the job worker directly from his place of business on the payment of duty. That means for waste and scrap also, there is no condition that it should be returned. It can be cleared by the job worker himself, but it is upon the payment of the duty. Now, moment you say that you are going to clear upon the payment of the duty, naturally you should be a registered person, logically. So if such job worker is a registered person, so that normal transaction that he can carry out, but it is always upon the payment of the duty, so it is not nothing like a duty free or something like that, or by the principal if the job worker is not registered. So principal will direct that particular job worker that, okay, you clear off that waste, scrap and all that thing, but it has to be upon the payment of duty. In other words, the condition for the return of the waste and scrap is not there. So basically what you have to return is, logically I should say, your finished goods, okay, or you have to clear from your place of job worker the finished goods. Indirectly, the law is trying to say that when the goods are lying into the premises of the job worker, it cannot stay for more than 1 year. If it's a normal goods, that means traded goods, and if it's a capital goods, it cannot stay for more than 3 years in the place of job worker, as the case may be. Now, friends, in relation to the input service distributor, friends, who is the input service distributor and what is the concept of input service distributor? See, input service distributor is basically a situation where there is a very large organization, and in the large organization, the major procurement of the services is done, say for example, centralized. Okay, so you are taking the bills for your input services in a centralized place, but maybe the services are being provided at distant locations. Now, for example, you may have one unit in Rajasthan, one unit in Delhi, one unit in Maharashtra, one unit in Tamil Nadu. Okay, but your centralized procurement of the services is done from Mumbai. So what you do is that you appoint these particular service providers, you enter into contracts with the service providers, you do the transaction, you make the payments, everything this particular Mumbai office is doing. But these particular services are probably consumed in the respective places at the respective divisions, and GST is basically state-wise and it is a consumption-based story. So what happens is that all your input tax credit logically gets accumulated at Mumbai office because that is your service distributor, but the actual consumption of that particular services is not done in your Mumbai office, but it is done at the respective distinct locations, maybe because it is your unit, branch, division, factory, whatever that you want to say, and state-wise separately units are already registered. So input service distributor is basically such a body in an organization which is basically procuring all the services but for other divisions of that particular organization. So that kind of situation. So your Mumbai office in my particular example will have lot of input tax credits, but it will have nothing to utilize. It will have nothing to utilize because those services are actually consumed or actually utilized at the distant places. So what does the input service distributor concept says? That your Mumbai office in my example has to register itself as an input service distributor. So it will register separately in a status of input service distributor. So it will have the input taxes and it will transfer the credits. I repeat, it will transfer the credits to the respective branch, division, unit, factory, etc. as the case may be, and your credit from your ledger will get shifted, will get transferred to the respective places, and those respective divisions will be able to utilize the input tax credit. It's a whole concept. In this particular concept, and there are a lot of basic clarifications. In other words, if supposing your input service distributor is got a credit of 100 rupees, then he has to transfer the 100 rupees. In other words, he cannot keep that particular balance. So eligible credit also has to transfer, ineligible credit also has to transfer. So all proper documentation has to be done. Ultimately, friends, the transfer of credit from your Mumbai office to that another divisions in the different states has to be effected by a proper documentation. In other words, if there is any credit which is directly eligible, directly going to a particular division, so you already know that certain services are directly related to that particular unit, so you have to transfer that much of whole credit to that particular division. In other words, the logical allocation you have to do. You don't have a free hand that you will apply your finance concept and your taxation concept and then you will manipulate the things. No, these things are not permitted by the GST law. GST law says that if the credit is directly relatable to a particular unit, division, etc., you have to transfer directly. However, there can be some general, that means there can be the mixed credits. That means one particular services maybe with respect to the multiple units is a possibility. However, there is no need, I repeat, there is no need for doing that particular, because it is a mixed credit, there is no need that you transfer it to a particular unit. In that particular case, some turnover criteria have been given. Use the turnover criteria and distribute that particular credit, but ultimately the total credit has to be distributed. Okay, now the supplier of the services, the input service distributor will take up that particular services. For example, head office. Okay, so head office of a particular large organization has got a lot of input service, has got a lot of input tax credit, lot of bills, etc. has been accumulated there. Then they have to distribute the input tax credit to a different unit. Remember that the distribution has to be done in a logical manner. You don't have a free hand. It's not like you do whatever you want to do. If it is directly related to a particular unit, unit, do that particular transfer. Not directly related, some turnover criteria has to be used. And if it is ineligible credit, that also have to transfer. That means the ineligible amount, basically you have to tally the account, the proper tallying of accounts you have to do. So if it is not eligible, then unit also we will not get that particular credit. But the transfer has to be done, that this much of not eligible credit has been transferred in not eligible category to that particular branch, division, unit, as the case may be, is a main heart of this particular situation. Everywhere the proper documentation has to be done. In other words, as I already explained to you, that proper discrepancy documentation, everything is to be done. You should not do excess transfer of the credit, nor should do the short transfer of the credit. That means the input service distributor, which is a separate registration in the GST itself. That means you have to register yourself as a separate status of being an input service distributor. Now you have a lot of responsibility to tally your things very properly, and only then the transfer has to be carried out. Okay. Now in this particular situation, friends, there is one extra point that should be kept in your mind. How is this particular credit to be distributed? Okay. Now your input credit in this particular situation, if your input credit is, say for example, IGST, and the ISD, that means input service distributor, and the recipient unit is in the same state, or if it is in a different state, So if it is IGST, will be transferred as IGST, whether you are in the same state or a different state. So if you have IGST credit, it will be transferred under the ledger of IGST only. Okay. But if you have that CGST, SGST kind of situation, and if you are in the same state, then your CGST, SGST will be transferred as CGST, SGST only if you are in the same state. Okay. But if you are not in the same state, if you are in a different state, then your CGST, SGST will be transferred as IGST only. I repeat, this is the manner of distribution. That if it is your input credit is CGST, SGST, but your unit is in a different state, that means your input service distributor and your particular unit is in a different state, this will be transferred as IGST. Okay. In other words, your input will be credit on account of CGST, SGST, but when the receiver unit will take that particular credit, they'll have to take it as an IGST if they are in a different state. Is a separate special provision which is already incorporated, which you call as a manner of distribution. Now look at this particular example, the manner of distribution. Okay. This very, very simple provision. The input service distributor is in Delhi. Okay, in that particular case, you got CGST, SGST. If your unit is also in Delhi, and if you have allocated, then there is a different one. But if your other units are not in that particular state, so for example, is allocated to 3, and this particular unit 3 is in a different state altogether, this total of these two figure, that is a 54,000, will be put to that particular unit, but it will be transferred in form of a IGST. It will not be transferred as same to same CGST, SGST. Okay. However, if it were to be in the same state, then you will retain the same status of CGST and the SGST as the case may be. Is that absolutely clear? Okay. However, other part of the situation is pretty simple and pretty manageable on this particular front. Now, let's take up this particular example, point number D, or this particular credit is with respect to unit none. So this is your unit number 1. Unit number 1 is also in the Delhi, and your input service distributor is also in the Delhi. That means they are in the same state. So UST, SGST, so the same amount will be transferred same to same manner. It's just like your, don't write in the examination in books of accounts. Just like you will debit one ledger and credit that particular ledger. This is the proper tally that you have to do it. That means whatever is your input credit, it has to be tallied to your transfer of credit. Nothing more, nothing less, as the case may be. If it is directly in relation to a unit, then you have to transfer to that particular unit. So look at this. This is a unit number 3. So this is transferred to unit number 3. So there is a direct allocation. Okay. However, if it is not directly relatable to that particular unit, then there is a turnover criteria, and you have to use that particular turnover criteria, and you have to divide it in between them in a reasonable basis as per the turnover criteria, which is already defined by the law.